Good morning and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is Stephen Erlich. He's the COO of the Wall Street Blockchain Alliance. We also have Austin Margulies. He's an associate with the Wall Street Blockchain Alliance. We're going to look at cryptocurrency and the energy cost and environmental sustainability behind that. Thank you both for joining us. So, Steve, some exciting news. You were just named COO to the Wall Street Blockchain Alliance. Tell us about the organization and what you hope to bring to the table.
Sure, thanks, Jill. So the Wall Street Blockchain Alliance is a leading nonprofit trade association created by financial professionals for financial professionals. And our mission is really to guide, promote, and influence the comprehensive adoption of blockchain technology and crypto assets throughout global markets.
All right, so, and Austin, how did you get to be a part of the group as well?
Sure, so I met Chairman Ron Caranta, who has been on the program
He's been on with us, yep.
Yes, and in conversations with Ron, I began to help him in promoting the WSBA's mission of facilitating this comprehensive adoption and also helping the WSBA to act as a thought leader for sustainable implementation of blockchain, whether that be on regulatory issues, on technology issues, or in the implementation of blockchain in financial markets.
Well, it's really interesting because you put out an opinion piece a couple of weeks ago talking about the cryptocurrency energy cost. And I think when we think of digital assets, it's always about the trading, the volatility, the technology behind it. But how much energy does it take for, let's say, the Bitcoin network to function?
So I think it's important, first of all, to lay the foundation of how a lot of this works. When two parties interact on the Bitcoin network, they're doing so without a typical third party facilitating that transaction, as is common in most transactions on payment platforms or supply chains. So when those two parties interact, third parties called miners effectively give their computational power to act as payment processors. And these computers run very complex algorithms that cryptographically verify and validate and process these transactions. It's an effective system in decentralizing a lot of these transactions on a distributed, immutable ledger. However, it does require a great deal of energy consumption to run the network.
So is it something, Steve, would you do this at your house, or do you need to set up at a supercomputer center or something that looks like a trading desk in order to use this energy?
Yeah, so basically to piggyback off of what Austin said, I mean, Bitcoin is highly energy intensive. It was designed that way because it is a security feature for the network. But what it also did was it created a bit of an arms race to see who could process these transactions and add blocks to the blockchain faster. When it was initially created, people were able to mine Bitcoin with just CPUs on their computers. Eventually, it advanced to graphics cards. Nowadays, to mine a cryptocurrency such as Bitcoin, you need something called an ASIC, or an application-specific integrated circuit that really does one thing: it mines Bitcoin. And the most professional miners are ones that have grouped these together into mining rigs, server warehouses located around the world: China, Iceland, Canada, even places like Washington State in the US that have access to cheap electricity or cheap cooling systems, because these get very expensive. And especially when the price of Bitcoin rose to what it did at the end of last year, stories started coming out about how energy intensive this is. And you hear stories about how the network uses as much energy as pick your small or medium-sized country in the world: Ireland, Bulgaria, pretty much any country in Africa. And the worry that if the price would keep appreciating, if network usage kept growing, that at some point it would actually have an impact on energy prices and perhaps climate change in general.
So, Austin, help me conceptualize this, because when you said it's about the same amount of power it takes to power a small country, so to run Bitcoin, that's the same amount of energy that's used to power Ireland, for example, for a 24-hour cycle. Is that correct?
Yes, right now that's the case. Right now we're looking at numbers between 3 and 3.5 gigawatts of energy to power the Bitcoin network, although that's kind of hard to put in relative terms unless you look at it like powering a country the size of Ireland. And those trends, as of right now, seem to be increasing in size. So when we look at the type of energy that the Bitcoin network is most often using, Bitcoin miners see electricity as their primary expense. The top expense being electricity to run the machines, the second being electricity to run the cooling systems that are necessary to keep these machines intact and running. And often the type of electricity being used to run these machines is coal-based electricity, often found in countries like China. And although China is, as a country, trying to move away from Bitcoin, still right now, about 70% of the global Bitcoin network is being supported by miners in China. And right now, it's being produced in an environmentally unsustainable.
Right, I was going to say, how sustainable is this? Because you would imagine as digital assets become more mainstream, it's going to use more energy. Is it a case where perhaps wind power or solar power or an alternative form of power can generate this energy required to run the networks? I can't imagine that producing more coal is going to be popular with the environmentalists out there.
And we see blockchain as a way to possibly use as a catalyst to move towards energy reform and move towards moving our energy grids towards a more sustainable byproduct of production.
All right. Well, thank you both for joining us at MarketSite, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.